The big three miners pay nearly $28 billion in tax, while other household names like BP and AGL pay zero. Woolworths says food inflation is rife, and AirBNB's bumper quarter. It's Friday, the 4th of November, 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. It is a crazy morning, a crazy 24 hours, really. So much stuff happening. I didn't know what to leave in and what to take out this morning.
Oh, that is a good problem to have, isn't it, for a business podcast like this? To be spoiled for choice.
Absolutely. Now, some days you sit down to write this and you think, oh my God, how am I going to come up with a full show? Other days you think, I can do 3 shows, and today is one of those days.
I like the former ones, the ones where you struggle a little bit, because that's when it falls on me to fill the gaps.
We need an extra 3 minutes in this show, Michael. Off you go.
It's all right, Sean. Leave it to me. I've got this covered. And anyway, seemingly those are the days where our listener numbers drop off a little bit, and it takes us a couple of weeks to recover. So I'm happy. I'm happy that this is not one of those. We've got plenty to get to, and you've got a really good chat today with Brian Fry, who is the chairman and CEO at Pernod Ricard Winemakers.
Yes, great chat to Brian about the state of the local industry. And then we get into stuff like, what people are drinking, new trend wines, shall we say, low alcohol wines, no alcohol wines, some of the facts and figures around that. It's a really fascinating chat. I've got to admit, though, when I talk to winemakers or when I talk to people who are experts in the alcohol industry, particularly wine, I feel a bit overawed because I just, you go and talk to people who know their wine and they start saying stuff and I just don't understand.
Yeah, it feels like there's a bit of a turning point. Like there's a fork in the road when you turn 18, and you can either go down that track where you learn everything there is to know about wine, and then suddenly you're really comfortable in all of those conversations, or you go down the Goon Sunrise path. And
I'm not sure I'd go that far, but... Oh, dear. This is like a frat podcast this morning. Yeah. Now, having said all that, Brian is certainly, very down to earth sort of guy, and you can ask him anything. And I asked him some pretty silly questions. He was very patient with me, I thought.
Well, Sean, you didn't ask him about Goon Sunrises, so anything kind of north of that was good. We're in positive territory. It is a very good chat. It is coming up a little bit later on, but the main story this morning: BHP, Rio Tinto, and Fortescue Metals, along with companies controlled by Australia's richest person, Gina Rinehart, paid more than $28 billion in tax last year. That is fairly significant.
It's about 40% of the entire corporate tax take, and shows how important iron ore is to Australia's well-being. The money, of course, goes into federal coffers, and it's used to fund everything from health and education through to defence and cyber security. So we want these big companies paying tax. Now, the big banks, the supermarkets, and companies profiting from the COVID pandemic were also among the biggest taxpayers last financial year, according to the Australian Tax Office. In total, corporate tax raked in almost $100 billion, of which $68 billion came from the very largest companies. Now, BHP was the single largest taxpayer, fronting up $7.3 billion in the 2021 financial year. Rio Tinto and Fortescue both paid around $6 billion. Commonwealth, Westpac, ANZ and National Australia Bank were also in the top 10, paying a combined $8.3 billion in tax. So what we do know are the big miners, the supermarkets and the banks are all paying their fair share of tax.
Sean, there's always plenty of talk about big multinationals not paying enough tax in Australia. Is that still the case?
Well, it is a bit. Now, multinationals have been allowed to minimise tax payments in Australia legally, and that's caused much of the frustration locally about overseas companies not paying enough tax. Now, in the 2021 financial year, Apple's Australian business had taxable income of $584 million and paid $173 million to the ATO. Sounds fair enough. Google had $300 million in taxable income, paid about $78 million in tax. That sounds right. But there are still a bunch of companies who didn't pay any tax, and they're from both local and offshore. In fact, about 30% of the big companies didn't pay tax. BP Regional Australasia, for example, had $17.4 billion in revenue but paid zero tax. AGL had $10.4 billion in revenue and also paid no tax. Now, some companies can reduce their taxable income by carrying forward prior year losses and by deducting expenses and taking into account depreciation. Now, often they're the sorts of things that appreciation, they invest, they can depreciate that. That's often where the big mining companies fit in. But still, 30% of the large companies to pay zero tax, not sure that one passes the pub test.
No, I think you might be right there. And those are some big, big numbers, aren't they?
Sure are. Incredible numbers. And just, I mean, of course, it happens because there's a boom in the mining industry. There's a boom in iron ore prices. But this is also happening when the government's talking about introducing or increasing tax rates for things like the petroleum resource rent tax. And this kind of gives a bit of perspective, perhaps.
Yeah, I think you might be right. How about local markets? What happened yesterday?
Well, the S&P ASX 200 fell nearly 2% to finish at 6,858 points on the back of a very weak lead-in from Wall Street. So far this year, the market is down 8%. Apart from telcos, all the sectors went backwards yesterday, led by the materials and consumer discretionary companies. BHP tumbled more than 3%. Fortescue was down 2.9%. Rio was off 2.2%. All the big banks and Macquarie Group were lower, so too the energy companies. The standout, however, was Telstra, a good defensive stock. It jumped 1.3%. In corporate news, Michael, software platform Bravura plunged more than 50% after delivering a huge earnings downgrade on Wednesday night, and A2 Milk jumped 4% after it said the US Food and Drug Administration had approved its application to sell infant formula into North America.
All right. How about international markets?
Well, I alluded to it before, the weak lead-in from Wall Street yesterday. Really, it's all about the US Federal Reserve, and that's because the world's most important central bank lifted interest rates by 75 basis points yesterday morning, the fourth consecutive 75 basis point hike. But the Fed gave some hints that the pace of increases might slow in the future. The Fed's worried that inflation isn't falling fast enough. It's prepared to put the US economy into a recession if it has to slow the pace of price increases. Wall Street was trading about 1% higher ahead of the Fed announcement. Then it slumped, led by a big sell-off in the tech stocks and consumer discretionary companies. By the end of the day, yesterday, the broad-based S&P 500 was down 2.5%. The tech-heavy Nasdaq was down 3.3%. Now, higher rates isn't good for the Aussie dollar either because it makes interest rates in the US relatively more attractive than those in Australia. And yesterday, the Aussie fell. It's now trading a bit above 63.5 US cents.
Did you just say that through slightly gritted teeth, Sean, considering that tomorrow afternoon you will be on a plane bound for the US?
Yes, it's a bit disappointing. But then when you think about it, 63.5 US cents and you pay commissions and that, so you're sort of getting 61 versus 71. I'm just trying to do the maths in my head. Let's say it's 12 or 13%. So if you're spending $10,000, it's $1,200 or $1,300. Oh, yep. Let's just move on.
You sound like you are someone working very hard to convince yourself that
That's
everything
right.
is okay and that you have found your inner peace.
I'm going to have a great holiday no matter what.
Yes, you certainly will. We'll be back in a moment with the rest of the day's business news. Sean, the Air Force is set to double the size of its Hercules cargo aircraft fleet by buying 24 new planes after US officials approved a proposed deal worth up to $10 billion.
It comes as the Albanese government puts other major defence acquisitions on hold for 6 months while it awaits the findings and recommendations of the Defence Strategic Review. Australia has operated the Hercules aircraft for decades, Michael. They've played a major role in moving troops and equipment in and out of war zones. It's also performed countless missions flying humanitarian supplies to countries hit by natural disasters. According to the Financial Review, the RAF flies 12 Hercules, with the oldest more than 20 years old. The mooted deal would involve the RAF retiring all those planes and boosting the size of the fleet with new aircraft made in the US by defence giant Lockheed Martin.
Mooted. It's really not a word that we hear enough of, is it?
No, mooted is a word we need to see more of.
Yep, absolutely. We'll bring that one back. Sean, food inflation is rife, with Woolworths yesterday revealing that prices at the supermarket were up 7.3% on a year ago, led by big jumps in fruit and vegetables.
Poor weather conditions sent perishable food prices higher, but the inflation goes well beyond that. Red meat and dairy products are also much more expensive. Woolies Chief Executive Officer Brad Banducci said things could get worse with the growing season for cherries and other fruits delayed by the wet spring and the current cold snap along the East Coast. Woolies said sales for the September quarter were down almost 2%, and the impact of the higher prices was to shift customers towards lower cost products such as frozen and canned goods. Woolies share price closed down 3.5% today.
Sean, fund manager Perpetual has rejected a $1.74 billion bid from a private equity consortium, but market watchers suspect another better offer is on the way.
Yes, it's been a bit quiet on the takeover front, particularly compared to last year, but this does ramp things up. Yesterday, a consortium of BP, EA Private Equity and fund manager Regal Partners offered $30 a share for Perpetual, sending its share price up 7% to close around that $29 a share mark. The Perpetual board said it was highly conditional and undervalued the company, coming in at just an 11% premium to its previous close. Now, it comes as Perpetual is actually working on a merger with fellow fund manager Pendal, and after its share price has fallen more than 30% over the past 14 months. While Perpetual's share price jumped yesterday, Pendal's tumbled 11%. There's going to be a lot of movement among fund managers, I suspect, in the next 6 to 12 months.
Yeah, sounds like it. Now, the anti-money laundering watchdog has launched an investigation into transactions through one of Australia's largest bookmakers, Sportsbet, and its smaller rival Bet365.
You've got to give Austrac kudos for doing this in Melbourne Cup week. When's it going to make the biggest splash?
Really? I hadn't actually considered that. That is a very, very good point.
Yeah, look, as Austrac said, it has appointed 2 external auditors to have a look at the foreign-owned gaming groups and report within 6 months. Now, both face the prospect of multi-million-dollar fines if there's evidence of weak compliance systems or proceeds of crime washing through the companies. We'll see how we go on that one.
Indeed. Now, Domino's share price tumbled 12% yesterday after warning that earnings will be materially lower in the current half year.
Yeah, it was the worst of the top 200 yesterday. The country's biggest pizza chain is facing some stiff inflationary headwinds from cheese costs to energy prices and labour costs. And the weaker Australian dollar has hurt the business as well. The group does keep expanding, pushing into Asia in August with the acquisition of 287 stores in Malaysia, Singapore and Cambodia. It wants to have 3,000 stores in the Asia region in about a decade's time. Now, Domino's share price has struggled recently, having fallen 30% over the past 4 months.
Sean, electricity from a wind farm backed up by battery storage will power BHP's Olympic Dam mine in South Australia from mid-2025 under a deal announced yesterday.
French renewables player Neon, which owns the big battery in Hornsdale, South Australia, will generate and supply the power from its wind farm under construction in the state's mid-north. Now, the 70-megawatt renewable energy baseload contract will provide electricity 24 hours a day at one of Australia's biggest mining operations, meeting half of the site's expected power needs. Obviously, this does a lot to help BHP bring down its carbon emissions when it's using wind power to drive the Olympic Dam site.
Sean, the boss of the corporate regulator yesterday warned that cost of living pressures and rising interest rates are pushing vulnerable consumers to fringe credit like buy now, pay later.
Yeah, just the fact that Joe Longo, the head of the Australian Securities and Investment Commission, called buy now, pay later fringe credit is kind of interesting. Mr. Longo said accessing mainstream credit was very hard for some people who are in financial hardship or in arrears on their loan repayments. He said there were some harmful and predatory credit products in the market, which ASIC was focusing on, and the regulated surveillance efforts were targeting credit cards and buy now, pay later.
The head of the Productivity Commission, Michael Brennan, yesterday claimed that single employer pay deals deliver higher productivity outcomes for business and workers.
That's right. And of course, his comments come as the Albanese government tries to push through multi-employer bargaining as part of its Omnibus Industrial Relations Bill. Mr. Brennan said international evidence shows that traditional enterprise bargaining was better for firms and workers. He said single employer pay deals allows firms to grow and offer different deals to workers, which in turn incentivizes workers to move towards higher productivity companies. Very free market thinking, which is fair enough. I'm not sure the government will appreciate it, though.
No, maybe not. Now, a jump in exports has pushed Australia's trade surplus to more than $12 billion.
Yeah, we talk about the trade surplus a bit. It's been so high and it really came off, though, in August, but it's back up almost $4 billion during September. Basically, it's about LNG and metal ore exports, but also plenty more travel going on.
All right, moving on to overseas news now, and along a similar theme, really. AirBNB has posted its most profitable quarter ever, but that couldn't prevent a big sell-off in the stock on Wall Street.
The accommodation portal said net income jumped nearly 50%, well ahead of what analysts were expecting, but the outlook isn't as promising as hoped. And of course, share prices are based on future earnings, not past earnings. Airbnb CEO Brian Chesky said there'd been a recovery in urban and cross-border travel. Going forward, he's confident that any downturn in coming quarters won't hurt Airbnb too much. Now, he talked about the downturn after the 2008 global financial crisis. Basically, people need to earn more income, and what Mr. Chesky thinks is they'll start renting out rooms or houses.
All right, now this one is pretty disturbing, really. Russia's invasion of Ukraine has driven 14 million Ukrainians from their homes in, and this is a quote, the fastest, largest displacement witnessed in decades, according to the UN refugee chief.
It's taken the number of refugees and displaced people worldwide to more than 103 million. Filippo Grandi said his agency had responded to 27 emergencies around the world in the last year. Some of the other large humanitarian challenges include 850,000 displaced Ethiopians, 500,000 people displaced in Myanmar. Now, Mr. Grandi pointed out that while all the focus is on Ukraine, there's plenty of other places around the world where people are being displaced.
And finally, Sean, one last Elon Musk story to finish off the week. Bloomberg and the Financial Times are reporting that he intends to fire as much as half of Twitter's 7,500 strong workforce.
And it could happen any time. The billionaire is looking to cut around 3,700 jobs at Twitter after his $44 billion buyout of the social media group. Musk also aims to mandate in-office work from Monday coming, reversing Twitter's current policy, which basically allows staffers to work from anywhere. Imagine how that'll go down. Musk has already made his mark on Twitter since closing the acquisition just a week ago. He's already asked staffers to work around the clock on certain projects. Talk about shaking things up.
I can't imagine he is too popular right now, can you?
No.
No, that is very much a developing story. We will keep an eye on that one. Now, Sean, up next is the Fear and Greed Daily Interview, and you are speaking with Brian Fry from Pernod Ricard Winemakers.
All about wine, about selling overseas, where Australia is selling to, the types, the varieties that are particularly popular at the moment. Pernod Ricard, of course, is Mumm Champagne distributor, and it's also starting up a Mumm Tasmania Sparkling. So we talk all about that as well.
Yeah, cover plenty of ground. You do not cover Goon Sunrises. That is coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Friday, the 4th of November, 2022. Make sure you're following the podcast and join us online on LinkedIn, Instagram, Twitter and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.